using the wrong.
Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Leroy Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. That's right, your roadmap to financial freedom. Inside, we're going to be discussing things for absolute beginners who never even heard of the stock market or don't know what the stock market is. We're going to teach what is the stock market, what is a stock, what is an index. We're going to teach all of that. We're going to talk about options. We're going to talk about futures. We're going to talk about fundamental analysis, technical analysis. Speaking of technical analysis, we're going to take a deep dive into the ICT concepts. We're going to discuss how to figure out how much you need as an individual to save for your personal retirement. We're going to talk about retirement portfolios. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening, everybody. I still got that music playing in my ears, and it's driving me crazy. I see light-skinned Deborah in here tonight. That means we gonna have a good stream. What's going on, everybody, man? How y'all doing? If this first time tuning into Tim's Tidbits, man, if it ain't sturdy AF. Now, I ain't seen you in a month of Sundays. I ain't seen you. Why? I thought you had an with no hanging up and up. Let's go back to Mr. AC, Mr. Farmer, Mr. Sturdy AF, Mr. I thought you had then sailed off into the I can't do this no more. I give up depths of Hades. I ain't seen Sturdy AF in a minute. Welcome back. I missed you. How you been? How everybody doing? I'm still learning and growing, but the W2 got me in a chokehold. Man, I was just talking about W2s this morning with the gang. I was just kind of venting a little bit. You know what I'm saying? I woke up in my old man feelings today. Shout out my sister-in-law, my beautiful sister-in-law bought me this beautiful fan for my birthday. Let me show y'all. My beautiful sister-in-law, she bought me this beautiful fan for my birthday. She said she wanted me to have a backup fan because y'all know my other fan that I had got, this one right here, right? This fan right here, I be having it sitting in front of me because, you know what I'm saying, the lights and stuff be like getting mad hot, right? And the reason why I get hot is because I'm behind, like I got a green screen like around me. I'm behind. Y'all can't see the green screen, because of course it's keyed out. But if you look at my ceiling, see my ceiling up there, like you can see where the green screen stopped. So I got a green screen up behind me, right? And then it's a light up there. You know, so I just unplugged something, right? So it's a light up there. It's a light over there. It's a light up there, right? And then I got some lights. It's some lights like right there that shine on my face, right? Some lights right there that shine on, and it'd be hot back here. You know what I'm saying? It'd be hot back here. So because my fan is on the other side of the green screen, like as you can see, like the ceiling over there, my ceiling fan is like back there, right? And that's the ceiling. It's like they go all the way to the ceiling up there, right? So I be hot. So my sister-in-law, you know what I'm saying, the beautiful lady that she is, she said, you know what? I'm gonna get Tim another fan. Get out of here. Ad. This ad doing on there. I'm using the YouTube so I can see what y'all. There you go. So this fan right here, this is my. So I'm using the. I'm actually. Oh, guess what I just found out? All this time, I thought the air was coming from out of here. The air comes out of this. It comes out of the little rim right there. I just found that out because I was holding it and I'm like, yeah, it feels good. But the air come out of here, out of that part there. Okay. Okay, you put stuff in there you want it? All right. What are you putting now? A lot of stuff? Okay. A few items. Like oat milk. Yeah. All right, that's fine. I was just trying to see what all do. I'm gonna wait till Chris get here before I submit it and see if he wants something. Toilet paper. That's what it was. I knew it was something that I was supposed to put that on there for me. Get I don't know if they're gonna have the one we normally get, but get the yeah, put that on there for me. And then when Chris get here, I'll wait till he get here before I submit it to see if he needs something. Y'all, man, y'all know how I do, man. It be real life around here, man. It be real life around here. But thanks to my sister-in-law for giving me a fan. And then I don't know how long hopefully it lasts longer than my other one. But if it lasts just as long as my other one, now I got two. So you know what I'm saying? I ain't got to worry about I done got hot. You know what I'm saying? And I got it on halfway right now. I got this one on halfway and it's working pretty good. Right. The other one got 3 settings and I have it on low so it don't die as fast. And I have it closer to me. Right. But this one here, I can't put it close to me because if I put it close to me, then it's going to be in the screen. It's going to, you know what I'm saying? I guess it won't, ain't no big deal if y'all could see it. You know what I'm saying? But, it's blocking my screen. It's in the shot. If I put it over here, it's blocking that screen. If I put it back there, it's on the side of my face. You know what I'm saying? Yeah, man, y'all know it is when you're tuning to Tim's Tidbits, man. I'm going to go off on tangents. All right. Don't dox me, son. Put my phone face up on live stream. Feed a show something. Feed a show. To see a bag app. Hey, be some weirdos. They be zooming in. They be like, oh, that's his phone. Yeah, so. All right, man. Look how y'all got me all off track, man. What was I saying? If this first time tuning in to Tim's Tidbit, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbit, I still want to say welcome. But I also want to give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Oh, that's Big Spider. That ain't the right one. That's Spider Game. Aranya Grande. That's just Big Spider if you don't hablo Espanol. And as you saw in the promo video when we started, you're in tune to the Price Action Recap. In this episode of the Price Action Recap being brought to you by the Smart Money Manuscript. The Smart Money Manuscript is a one-stop shop course that I'm dropping. Everything that I've ever covered on this YouTube channel as far as trading and investing, I'm going to be having it in a one-stop shop course in small digestible chunks where you can go through, watch it and take quizzes to test your knowledge on the different modules. Now, This will not, and y'all hurt my stomach. It might not be no long live today. I feel me. But it's solid educational foundation, right? There's no such thing as one course that's going to turn you into a monster trader, right? You have to learn the material. Once you learn the material, right, you have to study the material to like internalize it so that it becomes like a second nature type thing, right? And when it comes to trading, the way you internalize it is going back through old data, right? Going back through the charts and seeing when did the concepts play out. But you can't just look for patterns. That's what we all mess up, and we look for patterns and we keep forgetting it's about the narrative, right? It's about the narrative. What is price telling you? And once you get that, once you get the understanding of order flow and price delivery, then the patterns would jump off the screen at you because you know when to look for the patterns, right? But you just can't go looking for the patterns all willy-nilly, right? Because we're not pattern traders. The patterns are the clues that that smart money is leaving behind. And when you know what to look for, you're not looking for a pattern, you're looking for the clues that smart money left behind, right? But if you just looking for a quick, a cheap entry model, don't even waste your time, because you know what I'm saying, my customer service skills are horrible, and I don't do kind to complaining, you know what I'm saying? And you know, it is what it is. But I will say this right here. I found a glitch in the site when I was getting ready to lunch on my birthday. It was supposed to lunch on my birthday. If y'all noticed on the promo video, it don't say dropping on August 6th no more. I had to cut that piece out. I wasn't gonna go back and re-record a video. I had to cut that piece out. But I found the glitch. The feature wasn't working. I think when they took away one feature, it affected another feature. So now they trying to fix that. That's just my opinion. That's my thoughts. But I did notice that they had a live stream feature on WAP. So once it does drop, right, I will be doing, you know what I'm saying, random pop-ups for those that purchased the not the art of reading price section, the smart money manuscript, and I'll be doing, you know, random pop-ups on the WAP app through the, you know what I'm saying, on the WAP, I'll be doing random pop-ups on there. Right now, it won't just be like I do pop-ups now. It won't be like, hey, everybody, I'm going to go live in 5 minutes, pull up. No, it's going to be random, but they're going to be scheduled, right? I'm going to put out, hey, I'm going live, you know, this Saturday afternoon. I'm going live this Thursday evening. I'm going live, you know what I'm saying? And I might pull up with a lecture. I might pull up with a Q&A. I might, you know what I'm saying? But the reason behind it is because with when it comes anything really, it can be guitar playing, it can be drawing, it can be anything you do, but especially with trading, right? Just getting the concepts. It's a very long road to hoe if you don't have some type of mentoring. You know what I'm saying? So it's like, I don't want to just leave people out there flapping, hey, you get this little $69.99 course, you know what I'm saying? And, you know, just go off into the sunset and figure it out. So I'll be doing random scheduled pop-up live streams so that if people have questions about the content, or, you know what I'm saying, do some, as people say, drop some gems, you know what I'm saying, do some live streams with some stuff for people who they want to trade, but they don't really understand the ICT concepts, you know, but it's like, you know, because the teaching is just teaching you what the concepts are. You know what I'm saying? There's no mentoring inside the Smart Money Manuscript. Everything is just, teach you how to get it, how to do it, how to get access to it, what it is, what it means, what it stands for, all that. So I will be doing random pop-up live streams, you know what I'm saying, with and I don't know if their platform can save the live streams. I don't know. I haven't tested it. I haven't done it. I just saw that they got the feature. I don't know if it saves the live streams. If it doesn't save the live streams, hey, that ain't on me. I ain't making no promises on that. But yes, just want to let y'all know that I will be doing that. Because y'all know, little Timmy Rogers, hey, I always try to over deliver, right? I always under promise and over deliver, but at the end of the day, I don't want people to, be out there, you know what I'm saying, flapping, trying to figure stuff out, right? Trying to figure stuff out, especially since somebody in the gang was like, we was going over some stuff from like the beginning of the Tim's Tidbits journey. We was talking about like fundamentals, and somebody in the gang was like, this test let me know I need this course. And we were talking about some stuff. We were talking about some stuff that way back. Y'all see way back over there, right? Y'all see over there, right? We talking about some stuff way back over there. Yeah. So, hey man, I got a link pinned to the top of the chat, right? Oh, let me see who in here. I forgot to say what's up to y'all. Anyway, I got a link pinned to the top of the chat. It's to come join us on Zoom. I don't plan on doing no class participation today, so he'll learn to share. You can stop sweating because I ain't gonna be hanging up on YouTube. Hey, I ain't gonna be hanging up on YouTube. And then for those that don't know, right? It's like I love class participation, right? I don't be sweating people about pressing the like button. I don't be sweating people about like, hey, let's run the numbers up. I don't be sweating people about like all I like is class participation, right? So when people don't be wanting to pull up for class participation, it hurt my feelings. You know what I'm saying? So if you don't want to pull up for class participation, I just end the live stream, right? Thank you. Deodorant by my side. What? What? My deodorant? What happened? What? Oh, you were sweating. Oh, I got it. It went over my head for a second. It went over my head for a second. Right? I should be wanting the class participation, right? I should be wanting the class participation. So let me see. I got to get the angle on my fan right. Cause it's like it's blowing up, it's blowing a little bit too high. Like it's blowing on me like here, like this. I need to get something to tilt it down just a little bit. This must be the one my brother picked out. Cause I know the one my sister-in-law picked out wouldn't have had that problem. I think that's the one my brother picked out. So I set my wallet on. Oh, you know what? I could put that coaster. I put that coaster over there instead of putting my wallet on it. I put that coaster right there to make it lean forward a little bit. And then that way, yeah, that's it right there. Yeah, that's it right there. Yeah, okay. Yeah, that's it. All right. Uh, Click on the Zoom link and pull up in the Zoom. Come hang out with us. Um, you ain't got to worry about no YouTube throwing no commercials in there on you if you're on Zoom. You ain't got to worry about like a 4 5 second delay, everything in real time. And then on Zoom, you can unmute and ask questions. if you want to. Shout out light skinned Deborah up in here. What's going on, Sherwin? Shout out Lump up in here. We got Seawalk up in here. We got Venus in here. We got Yolanda in here. We got Honey. What's going on, Tish? We got Sam up in here. We got Stevie up in here. We got Sturdy AF in here. We got Here to Learn and Share up in here. I see more numbers than I see names on YouTube, but them the only two names I see on YouTube, so them the only names I'm gonna say. Now, if Price did anything today that caught you off guard, right? It did something totally contrary to what you thought it should do. Go ahead and click on that link that's up there, pinned to the top of the chat. Pull up, unmute, and let's talk about it, right? From this moment forward, right? Unless I say put something in the chat, I will not be looking at the chat, right? So if you want to get my attention, if you want me to see something, if it's muy caliente, unmute inside the Zoom and be like, hey, Tim, got a question, right? Appreciate that. Turn your attention to the chart right over there that we're looking at. We see that we have the front month on the NQ there. This is an hourly chart, as you can see right there in the middle of the screen. It says 1 hour right there, 1H, that stands for 1 hour. And this little purple line over here, that's the low of last week. That's our last week's low. This little purple line up here, that's the high of last week, right? That little golden line up there, yellow, golden, whatever it is, that's the high from last month. That's the July high. All right. As you know, as we've been talking about, hey, get out of here, Zoom. As you know, we've been talking about, we've been like really driving it home, right? The importance of understanding if the price delivery and order flow. And we've been, driving it home, the idea of understanding the dealing range that you're trading inside. If you don't know how to identify a dealing range, right? If you don't know how to identify a dealing range, then the algorithm is very nice. It gives you dealing ranges based off of dispensations of time, right? So, and if you understand these time values, you can find a dealing range that you want to trade inside. But Tim, what are these dealing ranges? Right? You just want to know, when we be starting off talking about stuff, we talk about the 4 pillars of price, right? We talk about the 4 pillars of price. That's what I like to call it. I don't know if I made that up or if I heard that, but it just sounds good when I be saying it, so I just keep saying it. But the 4 pillars of price are the open, the high, the low, and the close, right? Them the 4 pillars of price. That's what the algorithm, aka IPTA, you know what I'm saying, aka the market maker, aka buying and selling pressure don't exist, right? Those 4 pillars is what IPTA uses to leave the breadcrumbs, leave the something just moved on my screen. Something. Hold on. I think my son just came home. I got to find out if he wants something to add to this list.
I'm gonna let y'all listen to some music while Tim gone.
Works for me.
Keeping my grandbaby entertained while I'm trying to do the live with y'all.
Where the music at? I don't hear no music. What type of music?
Oh, another one coming on. You don't hear that? Let me turn
Let me
it up.
turn my speakers up.
Nah, I don't hear it.
I
You
don't hear
don't
it
hear
either.
it either. What?
No, I can't hear it either.
Come on, music. Can you hear it?
No, I
Not
still
yet.
don't hear it.
You still don't hear what?
Deborah, this is the music we all was just supposed to be singing in our heads. Boom, boom, boom.
What y'all talking about?
We had some entertainment while you were down.
Okay, who was entertaining y'all? Was it Deborah? Was Deborah entertaining y'all? All right. What was I saying? Okay. I think I was talking about the dealing ranges that IPTA provides for us, right? IPTA used the 4 pillars to create all of the breadcrumbs that it leaves behind for us in price, right? And if you know how to identify those breadcrumbs, you can, engage with price from a instead of chasing price or guessing, you can engage price from I guess educated is the word I'm looking for. That ain't really the word I was looking for, but an educated standpoint. You can engage from an educated standpoint, right? So if you don't know how to identify a dealing range, right, you just want to look at the highest high and the lowest low, because remember, the open, high, low, close, that's one of the 4 pillars, right? So the highest high, right? High, open, high, low, close, right? Open, high, low, close, right? The high and the low. The highest high and lowest low in a algorithmic dispensation in time, right? Well, Tim, what do you mean, right? Something that is complete in the algorithm's eyes, right? A day is a complete dispensation in time that the algorithm understands, right? A week, that's a complete dispensation in time, right? A session, that's a complete dispensation in time, right? A kill zone, that's a complete dispensation in time that the algorithm understands. So depending on whatever your trading style is, are you a scalper? Are you a swing trader? Are you added anything to it? Did you add anything to it? Yeah. Okay. Did you look to see what was in the cart first? Okay. All right. All right. Okay. Yep. With the quick walk off. All right. I'll complete that in a minute. Okay. So if you don't know how to pick your dealing range, you just pick a complete dispensation in time, right? And you say, Tim, I don't, what I'm saying, I don't know what these things are, right? Gang. You already know we have a time is king chart right here, right? Well, the time is king slide, right? And here are your, when it comes to days and weeks and months, that's easy, right? But why? Because TradingView and all platforms, they have intervals, right? If you want to find the prior day or prior week, you just put it on a daily chart and you go back 1 candle, right? If you want to find the prior week, you put it on a weekly chart and you go back 1 candle, right? And so it's easy to find that dealing range because you have intervals that's already made for you. But when you don't have intraday intervals, right? Like I just said, if you're on a 15-minute chart and you say, Tim, I don't have interest. I can't come here and say, give me a kill zone, right? Right. We have this here, and that lets us know, you know what I'm saying? These are your kill zones. You say, I can't come here and say, hey, we got, let me put it on a session. You don't know the times for the session. You come here, here's your sessions. These are your sessions. So you say, okay, I'm going to operate within this dealing range. And as long as you know what dealing range you're operating inside of, right, you can formulate a strategy. You can formulate your entries and exits based off of what's happening in that dealing range, because the algorithm understands that dispensation in time. It knows it. It's going to refer back to it. How long will it refer back to it, Tim? Anytime price is near those price levels, it's going to refer back to it. That's why our little homeboy Ant-Man makes an appearance on him sometime, because Ant-Man knows how to look back through all of, like, if you look here, right? If we look here, Ant-Man knows how to, you say, hey, Tim, why was price, like when we came up here, right? When we came here after midnight, right here, why was price just paying so much attention to this area right here? Right? You see what price did? Price went there, dropped down, came back to the area, dropped down, came back to the area, popped up, came back to the area, then dropped. Right? All throughout like the New York morning kill zone, price was just in that little area, right? All through this little area after midnight, price was in that little area, right? During London, it dropped down, then it came back, right? Then, but Ant-Man knows how to look through candles, right? And know how to look through candles and see what's going on, right? If we squanch up all the way over here and we look all the way over here, right? On this 15-minute time frame, if we look right here, right? Price came up when it poked above all of that right there. Price came all the way up to the first SIBI that was created before we dropped down here, right? So price has made this retracement all the way back up here. And then before retracing back, it went all the way up to the last imbalance before giving us this deeper retracement here below this sell side liquidity, coming back into this imbalance down here, right? Right. When we blast off there, that was our initial breakaway gap, that first BISI that we made. Then we had another BISI there. So that was our breakaway gap. Now that we've traded all the way back up here, now we got us a deeper retracement to there, right? But Ant-Man knows how to look all the way over there like that, right? He know how to look past all of this stuff here. Then you say, Tim, that's fine and dandy. Anybody can squeeze the chart up and then look across there at stuff like that. Okay, right? Yes, it is. Yes, it is. But why is it stopping and doing what it's doing? Right? If we go in there, wrong one. Can't remember. What date was that? Was it 31st? Yes, it was. I remember we put it on there, right? Ant-Man know how to look back through time, right? Ant-Man know how to look back through time, and he knows that if we look at, he knows that the open of that candle right there and the close of that candle right there gave us a new day opening gap for, and like, so this was July 30th at 6 p.m. when that candle opened. This was at July 30th, right? At 5 p.m. when that candle closed, right? That created a new day opening gap for July 31st, right? Ant-Man, right? Being the intelligent being that he is, Ant-Man knows that when we opened up here on August the 8th at 6 p.m. for this new week right here. When it traded down, Ant-Man knew that it was stopping on the top of that new day opening gap. Even though there's a bullish order block right there, right? Ant-Man knew it was stopping right there on that new day opening gap. That's way back there through all of these candles right here, right? Well, Tim, how do you know Ant-Man knew that? Because when we came back up here, right, that shouldn't say the 8th. That should say, yes, the 10th. I said the 8th. Right over here on the 10th, when we opened up here on the 10th, right? I was hovering over the wrong counter. That's from Friday, right? When it opened up here on August the 10th at 6 p.m., right? Okay. And then because when we came back up, right? When we came back up here and poked above that high, right? When we dropped back down, right? We took out the sell side below that bullish order block, right? So that's what lets you know that that bullish order block is not what was supporting the price, right? That bullish order block wasn't supporting the price because when we came down to the order block, right, the algorithm acquired more long positions, right? And then it went up there, right? And it offset those long positions there, right? And then we dropped down. And once we dropped down, we took out sell side and accumulated more long positions. But where are we staying? Inside of that new day opening gap that Ant-Man saw way back over there. All right. So during the London, we drop down and we take out sell side liquidity, right? Where was that sell side liquidity made, right? That sell side liquidity there was made during a prior session, right? So when we drop down below this low here, right, during the London, right, we took out the current prior session from today's trading, right? And then we also took out a prior session from the day prior. So now we have two levels of liquidity that we're taking out here, right? Why? Because this comes from a higher time frame, right? This is something from a prior day, right? Sometime, right? This right here is for the current trading day, right? But once we start, right, that 12 o'clock there, right, this is a new day for the algorithm, right? And so we're not only taking out the prior session, but we're taking it out from another day, right? So we got two levels of liquidity being swept right there. So now that we've come down and taken out those two levels of liquidity, and where do we take them out at? This anticipatory reactionary point that Ant-Man saw by looking through all of these candles, right? And then we go back up and we engineer more buy side liquidity, right? We're engineering more buy side liquidity there. Okay. Then we drop down here, take out sell side liquidity. Where do we come down to? Consequent encroachment of that new day opening gap that Ant-Man looked all the way through price in. All right. Because remember, we said once we noticed the signatures, we noticed that this isn't what was supporting price, right? Price is being supported here, right? And not only is price being supported there, right? If we go up to a 60-minute time frame, right? We go up to a 60-minute time frame and we look right here, right? There is a 60-minute fair value gap and look at all of these bodies right here inside that 60-minute fair value gap, right? And what fair value gap is that? That is the very first one that we created when we dropped down there. The algorithm, it knows him it knows all of them. It knows every imbalance that it creates, right? But there's something special about the first. You know how everybody be like talk about your first love, your first child, your first this, your first that. What was your first job? They had a little questions. What was your first job? What was your first teacher from elementary school? It's always something about those first. Even in nature, it's something about them first, right? Even in religious circles, it's something about them first. Them first, man. Now, all right. Even if you were not like Ant-Man and can look through and see that right there, right? This Sibby here is where we're just working that Sibby, right? And what do we call it when we're just up here consolidating like that right there? The algorithm is doing what?
Generating liquidity.
Yes, we up here just engineering liquidity up here. Where are we engineering liquidity at, right? After we got a break in market structure, right? Those are little signatures you start to pick up on, right? Not just any break in market structure, right? It could happen, but most time when you see it happen at a break in market structure at a very particular point, right? And you start engineering liquidity like that right there, you start noticing that the algorithm was leaving all these little clues. And when you understand how, once you peep the signs of how the algorithm is using them, then you understand that when you come into, right, you come into, see here, let's say New York. All right. When you come into the New York session, right? When you come into the New York session and then you realize, hey, we're not doing a lot, right? This is the New York kill zone. This is the New York morning kill zone, right? This is the New York afternoon kill zone, right? So when you realize, hey, we're not doing a lot in the morning, right? We haven't done a whole lot during the London. We haven't done a whole lot during the Asian, right? So then you said, okay, we've just been doing all this accumulating here, right? And so when we come into another specific time, right? And you see in the lunch time, right? We get this little manipulation there. We go up and we come down and take out that low. So now you're saying, hey, right? We was accumulating there, engineering liquidity right here. And then we manipulated out the high, right? And drop down. So now that we've manipulated out this high and dropped down, the afternoon may present something where I can find a nice short opportunity. Right? It can present something. I can find a nice short opportunity in the afternoon. And as you see in the afternoon session, you see the afternoon was a pretty look at the afternoon kill zone, right? And look at the morning kill zone, right? Which one looked like it was a more favorable session to trade? The afternoon, right? Because these are hourly candles, right? These are hourly candles. So for the morning kill zone, you know what I'm saying? We got a bunch of back and forth. We got a red candle, green candle, red candle, green candle. They just overlapping each other. Oh, okay. All right. right? Red candle, green candle, red candle, green candle, just overlapping, right? And then the lunchtime, selling down. The afternoon session, selling down, right? Which one look like on this hourly time frame? What looks more low resistance? Lunch in the afternoon or the morning session? Look like lunch in the afternoon to me, right? And then when we look back over to the London session, right? Let's go back and look at the London session. Let's turn on the London, right? Let's look at the London session here. What did the London session do? Right? The London session sold off. Right? The London session sold off. The London session engineered buy side liquidity and sold off. Okay. So as we went into the New York session, we started engineering liquidity again. Right? We started engineering liquidity again. What do we do right here? Right? This New York morning low, what did we not take out? This London low right here. Okay. So the London, we sold off, right? Now we poked above the daily high and weekly high during the Asian, right? Poked above it again. Then in the London, we set relative equal highs and then sold off. Okay. Set relative equal highs and then sold off. Then we came into the New York session and set relative equal lows and just continue to engineer liquidity. Right? Came into the lunch session and we manipulated out the high and then dropped down and got a breaking market structure, taking out the New York morning low, taking out the London low, right? So the London, when we came in, right, we was treetop tall. Where were we? In the premium of our prior days dealing range. We were in the premium of our prior weeks dealing range, right? Based off our dealing range, right? Should we be looking for opportunities to buy right now? No, we shouldn't. Why not? Because we're in the premium of our daily range, right? So on the day, we shouldn't be looking for reasons to buy based off the daily time frame. That's just, if you don't understand how to trade against the grain, you're only looking for reasons to trade with what the time frame, how your time frame showing you. Okay. The London session is already tipping its hand, right? Showing weakness, showing it wants to retrace. But Tim, how's it doing that? The Asian session started it off for you. The Asian session poked above the prior day's high and prior week's high, right? Dropped down, traded back up, right? Poked above it again. Every time it poked up there, it kept rejecting, right? Not showing a willingness to blast through during the Asian. So we're just sitting here engineering liquidity during the Asian. The London session comes, it sets up relative equal highs, engineers buy side liquidity, and then drops away. Right? What does that sound? Somebody tell me what that sound like when the algorithm engineers buy side liquidity and drops away. What does that sound like the start of?
Manipulation.
Okay, yeah. But what does it sound like the start of? If it engineers buy side liquidity and then quickly drops away, what does that sound like the start of? What it sound like we starting?
The Wicks.
No, not no. When you talk about it's AMD is the whole gist of it. Somebody saying AMD. AMD is the whole gist of it. But when we engineer buy side liquidity, right? We're engineering liquidity, right? We're engineering liquidity, right? And you see that we engineer buy side with relative equal highs and quickly drop away. What does that sound like we're starting?
The power of three.
The power of three has something to do with it. It's something to do with.
Oh, the model. We're starting to make a market. Let me get this right. A market maker model.
Yes, a market maker buy model to be
Buy
exact.
model. Okay.
Right? Because we engineer buy side liquidity and quickly dip away from it. Right? So when we manipulate in the highs and dip away, right? That sounds like the making of a market maker buy model, right? And then, hey, Blackout Davis, say it with your chest. Don't be retracting those statements, right? And then once we took out sell side liquidity, right? We came back over here, we dropped down and we engineered sell side liquidity. And what did we do? Right? While we still here, we attack that buy side liquidity that we engineered. Right? Now, looking at this right here, does this look like a market maker buy model? No, it doesn't. But what is the algorithm doing? It's engineering liquidity, initial consolidation. It's set relative equal highs up here by engineering more buy side liquidity. How did it do that? Because it poked up there, right? Tricking traders in that want to go long, right? To make their sell stops go down there, right? And then it went back up here, created a double top, right? Created a double top. Then it dropped down, right? And took out sell side liquidity, right? And then it came back up, right? Engineered sell side liquidity, traded up and engaged that buy side liquidity that it engineered, right? Is that not accumulation, manipulation, and distribution? Yes, it is, right? Yes, it is. All within this little area of consolidation. When did it happen, Tim? It happened during specific times, right? Asian kill zone, London kill zone, New York kill zone. Oh my goodness. Oh my goodness. I'm tired of cooking. I ain't gonna cook no more. We just gonna call it right there. We just gonna call it right there. Do you see what I see? When you look at the candles on your screen. Man, do anybody got anything for me? Do anybody got can y'all are y'all starting to see the importance of time and price? Are y'all starting to see how everything ties together? Are you starting to see how you don't have to be looking for the patterns? If you understand the concepts and you know how to look at the signatures that the algorithm is leaving behind you, you don't have to look for patterns, right? You don't have to look for patterns.
I have a question.
Okay, all right, go ahead.
Okay. So at what point were you convinced that it was not making a market maker buy model? And you said, no, it's doing something else. It's at what point was
Once
it when
it
it made relative equal lows or
no, once it finished it right there, right?
oh and,
You see,
and rejected?
you set it there, then you come back and you take it out. All right, so it's done. Boom. Now it's done. The market maker buy model is done. Right there. You accumulate, right? You engineer your liquidity, right? You have your smart money reversal, right? Low risk buy, take it out. All right, it's done. See, the market maker model is done there. It's like we engineered liquidity and we sold off, right? And in the sense of, let's talk about another concept, right? When you engineer liquidity, right, and sell off, that's a sign that institutional sponsorship has stepped into the building, right? Why? Because we got to sell off and we move to a particular type of discount. It's not a discount of the entire range, but we move to a type of discount, right? What discount we moving to? We move to the discount of this range that's been established since we opened on the day, right? Not only did we move to the discount, we go and take out the liquidity, right? We take out the lowest low from the day. So we move to a discount, we move to sell side. Those are signatures of what? Institutional sponsorship. We have evidence of buy side liquidity left in the market, right? We start to displace up, retrace back into discount. Where do we come? Down here to this wick, which is what? A type of imbalance. Where is it? In the discount of the move from here to there, right? Come down there. It also aligns with what? Consequent encroachment of that higher time frame PD array. Then we go up and do what? Engage with the buy side liquidity there. Evidence of institutional sponsorship. It's all the same. When you know what to look for and when to look for it, they can't stop you. But yeah, it's done there. And then once it get done, right? What do we talk about? Right? The market maker models are connected. So here, right? We started there, right? Went down and completed it, right? This is your left side of your market maker model. This is your right side of your market maker model. But as we came over here, we engineered sell side liquidity there. So now this is our right side of our market maker model. This is our left side of our market maker model. That's the right side of our market maker model, right? We got a market maker buy model that moved into a market maker sell model. These are not true market maker models, but when you think about the concepts, the market maker model is built around this same idea of accumulation, manipulation, distribution, right? Accumulation, manipulation, distribution. Accumulation, manipulation, distribution. Somebody said after it distributes, why did it drop all the way back down? Because of delivery. Yes, you're offsetting. When you offset, right? When you deliver, right? You're gonna anticipate some type of move away, right? And when you're, how can I put it without creating confusion? When it's at a anticipatory reactionary point, when it's taking out a intermediate or long-term higher low, right? We anticipate deeper retracements, right? Because you're at a level where you anticipate price to retrace or reverse, right? But whenever you get into an area where you're on that distribution leg, right? You're going to anticipate deeper retracements at certain points, right? Just like as we was coming up here, right? When we traded above there, right? We got a deeper retracement, came here, retrace, right? Then once we came up to above that high right there, right? Into this new day opening gap, right? We got a deeper retracement. Then we traded up, right? We came up here with engineering liquidity there, but not only are we engineering liquidity there, we just set relative equal highs. So now we're getting a deeper pullback, right? And that deeper pullback, what can we attribute that to, right? We can attribute it to a lot of things, but if we talk about a market maker model, right? And remember, we said here, this is what we anticipate. We want to see price hit, right? Why? Because what the algorithm is doing, nobody, right, had got to this point yet, right? And I don't know if that still holds true, right? I don't know if that still holds true, but we can check it. Right. That was yes, this was the point here, right? So this is the high there. Nobody has made it there yet. The NQ has not made it there. The ES has not made it there. And the Dow has not made it there. So nobody has made it there yet. So in the sense of a market maker buy model, right? No one has completed the market maker buy model yet. So we're not looking for SMT divergence yet. Okay. So when we're looking at where we are in price, all right, when we look at this here as a market maker buy model, once we over here, right? It's right here. This right here is our area of reaccumulation that's happening right around that upper quadrant, right? This high right here was, let's run it, right? Let's run our fibs. Okay. Let's run our fibs there. We're going to go put it in the 4th grade. Let me turn off this other stuff because it's hurting my eyes, right? So here we are here. We got our upper quadrant there, right? That's our buy side liquidity. Once we get to that upper quadrant, now we don't want to see a retracement coming back down to this 50%, right? We don't want to see that, right? Why? Because after we go above here, we don't want to see that deep retracement no more, allowing people to pull their orders. Okay. What do we talk about? The original silver bullet, right? The original silver bullet, right, is over here. Where's that original silver bullet based off of? Right, that last area when you coming up here into the last area of accumulation, right there at the upper quadrant there, right? You're looking for a reason to just run off into that right there. So now, okay, what can we utilize based off that, right? So we can utilize many things, right? But one thing you could look at, you could look at it now. We're coming up here engineering liquidity. So since we're engineering liquidity on this higher time frame, now you can say, okay, they may want to manipulate it a little bit more. We're getting ready to go into CPI. They may want to manipulate it a little bit more. All these factors here, but all else being equal, not going in front of CPI, right? We have, right, a fair value gap resting right there at the upper quadrant. We have a high probability inversion fair value gap resting right there at the upper quadrant, right? We have a breaker over here resting at the upper quadrant there. So all else equal, right? You look for this area to act as support to give us our low resistance liquidity run into the buy side to complete the market maker model, because this is your original silver bullet right over there. All things equal, what else can we identify on this time frame, right? We're going to come here, but we're going to drop down into the 5-minute time frame there, right? Come there, and we're going to anchor it to these bodies here, right? Get on there, go from body to body, right? Go from body to body, go to that high right there. Nope, it's another high over there. All right, go from body to body, and then we're gonna go to our OG OTE. All right, if we look here, right, so we got us a 62, got us a 70.5, didn't quite get the 79 yet, right? Well, we got OG OTE going on, right? All else equal, right? There's your OTE retracement, and you're looking for it to give you a low resistance liquidity run into the buy side, ending the market maker buy model, right? Yeah, we talked about that the other day. You say QQQ hit all-time highs. What did we say about that? Who remember what we said about that on the NQ? Who remember what we said about that on the NQ? He said the Qs hit all-time highs. Who remember what we said about that? What we talked about that on the NQ.
That might have been when y'all left YouTube and went to Zoom. and I couldn't see it.
Wait, why you popping all up in here like your feelings hurt?
They were.
Oh, I don't remember when I said it. Who remember? Was it after I hung up on YouTube when I said it? Hey, JMZ, say it with your chest. Don't be retracting those statements. Don't nobody remember what I said? I just mapped it out for you right there, giving you a clue. Let me do it like this. Let me do it like this right here. Do you remember now?
You talking about the rejection block?
Yes. Do you remember
Okay.
now? What did we say? What did we say?
It shouldn't go past
Nah, I didn't, man. Yeah, I ain't said nothing like that. Because he said the Qs hit market all-time highs. And then I said, what do we call? Remember, we said we're like, we want to see it take out that high, but based off this rejection block right here, right? If we had some bearish divergence, then we would be looking at this as what?
Well, it's a higher close because we closed higher than the previous closed.
It's a higher close, so we have taken that liquidity above that all-time high. You see what I'm saying? So on a closing basis, right? Because when they give you the reports and they say, hey, they made on, even though we wicked up here, and that's the true all-time high on a closing basis, the NASDAQ, the NQ futures they made an all-time high. When was that? Yesterday on the 8th? What is that? What date is that? It made an all-time high. I need my candles because these lines on Friday. It made a new all-time high on Friday. And then yesterday, it poked above that high. So it made an official new high because based off where we closed at a new high. This day we didn't close at a new high, but they will work it to say that we made new all-time highs before closing, even though we haven't really made new all-time highs yet. But based off the closure of this candle here on the 30th, we closed above and closed at a new all-time high right there. And then if the way you sell it, right? The way you sell it is, hey, we just made all-time highs and closed off the high. Oh, buddy, you ain't make nothing. But the way you sell it is because that's the new high right there that we closed at. That's the official high, right? Because when they give you the percentages, right, they're giving you the percentage based off the close, the percentage from there, the percentage from there, the percentage from there, the percentage from there. That's what they give you. They're not giving you the percentage from there, right? So we had already talked about that. Like we said, if the ES and the YM had already taken this high, then trading up into this rejection block, we would put less of a need for it to take that high out because the other sisters would have taken it already, and we would just be counting that as the bearish divergence, right? Which we can still get that bearish get that engineering and liquidity here, because we can engineer liquidity on this time frame, right, to retrace back down into that fair value gap to go back up and take out that high. Because what is that doing? That's creating trend line liquidity right there, right? So then once we come back down and drop down, then we get us a bearish breaking market structure. Then we can get a deeper retracement, right, to go into the seasonality, right, to come back down into the areas that we was looking at before. Then once we get that, and starting to go into like October and November for our Santa Claus rally, right? You always want to watch what the algorithm is. Don't trade what you want, trade what you see, right? And this right here, because what we always say, it don't have to get to your draw. It doesn't have to get to your draw, but until it negates what that draw is, excuse me, until it negates what that draw is, that's still your draw, right? But you always want to watch the signs of what it's giving you, right? You always want to watch the signs of what it's giving. And right now, right, the daily time frame, right, it's still showing bullish signatures, right? It's still showing bullish. Right, it's doing everything bullish. We got an inversion fair value gap here, right? We got a bullish fair value gap there, right? It's still giving bullish signatures, right? Which is good for the fact that we're going into a bearish seasonality. Why? Because you want to see, before you start a bearish trend, you want to see buy side liquidity taken out, right? So if you're going into a bearish season, right, you want to take out the higher time frame liquidity. All right. And what better time frame liquidity to take out than the year? Right? Why? This is all-time highs. So that's the highest point we've been all year. So if you're going into a bearish season, a bearish quarter, what's higher than a quarter? A year. So take out the buy side from the yearly high to go into a bearish quarter, a bearish season, or whatever. Right? It's just all the stuff you just want to think about as you're watching these candles. Somebody asked me something and I kind of went off. I know Deborah said something, somebody else said something, and I went to run my mouth, and I don't remember if I answered what you said or not. But do anybody got anything else for me? Did anybody get anything out of this live tonight? I feel like I was cooking, but
You were cooking.
Where my dog Sherwin at, light skinned Deborah?
He's
I'm
right
gonna have to
here.
go back and watch this one.
Me too.
See what said, I
Me
got to go
too.
back and watch it.
Me too,
Yeah.
'cause I ain't see that AMD till he showed me.
I should have hung up on YouTube so y'all can't go back and watch it.
Oh. No.
I'll call your mama.
You call my mama? She ain't even home. Is mama home long? Did mama make it home long? I ain't see no text.
Yeah, they'll check your phone. See that?
Oh, she texted at 7 o'clock. She texted at 7 o'clock. She ain't even stop by and see me. I'm sick of it. First thing she
Stop
supposed
by
to
and see me. What you talking about?
Oh man, she ain't supposed to stop by and see you. I'm her favorite son. She moved all the way up here next to me. Got him. All right, man. That's all I got, man. I'm gonna go to my mama's house and see my mama. Do anybody got anything for me before I go? Don't feel pressure that, you know what I'm saying, I'm about to go see my mama. I'm here. So if you got something, go ahead and ask your question. But if not, we're going to go ahead and wrap it up there. Going once.
Tim,
Going
I got a
twice.
question.
What you got, Sam?
So looking at the weekly chart
Uh-huh.
on the NQ or even in the ES, but on the NQ since we're on it.
Uh-huh.
Like if you look at that green candle.
Hold on, let me do this right here. We're gonna look at both of them now. Go to 1 week. All right. The NQ on the right, the ES in the middle. All right.
Okay, so like if you look at the last week's candle.
Here.
Right. You see how it's inside of the range of the previous candle? Would you classify last week as accumulation because it didn't take out the previous week's high or low?
Last week itself, no, but we are still in accumulation on this time frame because we're still inside this range, right? So just based off this week, No, that's not accumulation. Now, this week here, you can argue accumulation because it's like we're closing so near where we open. But anytime we got expansion in between the open and the close, that's not accumulation in that dispensation in time. But on the weekly time frame, we're still in accumulation on both indexes overall.
Okay. So even if it's not, it didn't expand the previous week, it's still not accumulation. It's just, it's part of
This
the
is
bigger
just
picture is
this,
what you're saying.
yeah, this is just an inside. This is an inside week. It's an inside bar, right?
Okay.
So it's just an inside week. Now, an inside week doesn't equal accumulation during that week, right? Because during that week was a when we looked at it, it was a power 3 week to the upside, right? It was a bullish week, right? So if it's a bullish week, a power 3 bullish week, then it's not going to be accumulation. Look, let me do this right here. Let me go to the weekly chart so that I ain't got to be hunting. We're going to highlight last week there. Last week there, like that. Then we're going to go down to 60 minutes, right? And you see here, right, how we came here, right? Came near, dropped down a little bit in the beginning, took off, retraced back down. Then we end up coming up, right? And then, so that's our week there, right? It's a bullish week. So it's not accumulation. You see what I'm saying? We're not accumulating throughout the week because we got that expansion from where we open to where we close. We got that expansion. So we're not accumulating in there. This right here is, it's going to be either a that expansion is either going to be part of a manipulation or a distribution, right? It's going to, and in this case, it's a part of a distribution because we're in a buy program. So this week here, when we got that bearish expansion, that was our manipulation leg, right? This was our manipulation. And because we're in a buy program, we're coming to the downside, taking out sell side. So this is our manipulation. And then if you notice, right, you see how when we manipulated, you see how we went down, we paused, and then we pretty much dropped. But as we're in the distribution leg, we went up, we retraced back down, went up, retraced back down, went up. Now we're retracing back down. It's like smart money is dipping it back down to discounts in order to participate and buy on this distribution leg. Right. And then if we look at let's look at another week, something with like more of a, so something where we not really, it's not a complete doji, but it's close enough. Right. It's not a complete doji, but it's close enough. So if we go back there like this, see the difference right there?
Right.
Right. See, it's like we pretty much open and closed in the same place, but you see the price, we don't have that expansion over the week. So when you got like those little doji candles or those really small body candles, the price is unwilling to leave that opening price. That's consolidation. Like when you look at a candle like that, when you drop down in time frames under whatever time, it can be a 1 minute time frame. When you drop down to seconds, it's going to look, you know, pretty much like this because it's unwilling to leave the range. And consolidation by definition is price trading within a range without a willingness to leave it either to the upside or the downside. So when you see those indecision candles, right, then that week or that day or that hour, you can say, okay, that right there would be a accumulation or consolidation week, a consolidation day, whatever. But just because it doesn't trade outside of the range of the prior candle, only thing that makes it is an inside bar, an inside day, or in whatever you want to call it.
Cool. Appreciate that.
All right. That's my first time ever hearing Sam B voice. He done pulled up with the Freddie Cruz Quiet Storm voice. Hey, you now tuned to the Quiet Storm with your boy Freddie Cruz. Look, do Freddie Cruz still be on the radio down there?
No, it's a new guy named Lenny Green.
Oh, Lenny Green ain't got nothing. Lenny Green and Keith Sweat need to get out of here. Freddie Cruz is the Quiet Storm king. if you from South Florida and you don't know about Freddie Cruz, stick yourself, Tony.
Freddie Cruz had that extra saliva though in this conversation.
It's your boy Freddie Cruz in the Quiet Storm. Freddie, what was Freddie Cruz? Was he Hispanic? What was Freddie Cruz? I ain't never actually seen Freddie Cruz.
Yeah, he got. I think Cruz is Cuban, so I'm not sure. But
I ain't never seen him, but I know that boy had like a mouthful of slop. Boy had a juicy mouth. Oh, that's your boy Freddie Cruz. Now you got Keith Sweat and what you said his name is?
Lenny Green. Where Keith Sweat at? Keith Sweat on the radio somewhere?
Yeah, Keith Sweat do the Quiet Storm. He been doing the Quiet Storm for years. He
was up there?
No, all over. He got a syndicated show.
Yeah. Oh well, he ain't down. You know, South Florida got Freddie. Lenny Green.
Keith Sweat. I heard Keith Sweat on let me see.
I told you I heard D-Ray on the station, and I think I was in Detroit or something. Detroit or Chicago, somewhere up in there. He got a state. It probably was Chicago, yeah. That's where he from, right? D-Ray from Barbershop. He got like a morning show.
Chicago. Yeah, I think it's Chicago he from. I think it's Chicago.
He got a morning show up there.
He's from Chicago.
Okay. Yeah, he be doing like a little early morning show, kind of like Ricky Smiley or whatever.
Okay. Oh, so see, he ain't got a lot of stations no more here. I guess he's starting to fall off.
Who, Keith Sweat?
Yeah, I'm looking at it right here. It's say like where can you hear where they got 96.3 and 98.3 FM. HD2, he might be like on them HD channels. But I used to hear him on one of these stations. Was it 98? It wasn't 98.3. We got a 98.3 up here, but it wasn't. It was one of them stations. Yeah, he still got his thing. Cause say 2025 right there. Keith Sweat, Quiet Storm. He got it. That's on YouTube. Maybe did he switch over to YouTube? iHeartRadio. Sweat Hotel. That's the name of it. The Sweat Hotel. That's it. So yeah, he still got the Sweat Hotel. That's what he called it, the Sweat Hotel. He don't call it the Quiet Storm. He called it the Sweat Hotel.
I got a DM Sweat and tell him to tune in to get some of these ICT concepts. They got him doing the radio.
Look at Fatty Jackson on there. Ride me tonight. Go ahead, Fatty Jackson. Sade. Keith Sweat. He need to be doing the radio. Yeah, man, now and you know. You better. I got there to get mad at Jacquees because Jacquees done said something slick to him. Keith Sweat been during the quiet. Hey, Miss Mari say, Keith, man, he been doing for 20 years, young buck.
Back Keith Sweat doing that.
Hey, man. That's it. Ain't nobody asking no more stock questions, so we're gonna wrap it up. I just start running my mouth about dumb stuff. I'm gonna finish this Walmart order, and then since I'm going to see my mom, I'm gonna see if they can have me pick it up tonight. All right, y'all. Tomorrow is Tuesday, so no tape reading. No tape reading in the morning. Hey, Lump, tell sister-in-law this fan worked good, man. I just had to tilt it down a little bit because how tall it is. It was just like blowing like on my forehead. But I put it on the coaster. I sat it on the coaster and it leaned forward. And I got it like halfway. I got it. Well, I had put it on 6. It was halfway.
I was on the phone earlier. I saw you saying something about the fan. You said you thought it was coming. The air was coming from out the bottom.
Yeah, I thought it was coming out the bottom, but it's coming out around a little ring. Cause it's got like the vents and stuff at the bottom. You can see through it.
Yeah,
So
what they call it, a bladeless fan.
yeah,
It's a
bladeless fan. So I thought the air was coming from down there, but it's coming out of the handle part. It like
You
all
hear
around the circle.
Billy's man, I tell you.
Man,
You
stop,
hear
man.
Billy's.
Like you knew it came out of this. You knew the air came out of there.
Come
I
on,
didn't.
man.
Yo, is that a Dyson?
No,
It's
that's not a
Dyson
Dyson.
no,
fan?
this is a
No, okay.
this is a
No,
That's
I
what
know the Dyson fans do that.
Yeah,
Yeah, I heard
Dyson,
they
the
work
original
really.
bladeless
yeah,
fan.
that's what it
Yeah.
said right there. I ain't making that up. It's a the only thing on here that's English is bladeless fan. That's the only thing that's on here. Ain't nothing else on here English. Like it is a bladeless fan, but it's a it's a what?
No, I said as long as it works.
Oh yeah, it's working good. It's working good. I appreciate it, sister-in-law. No tape reading tomorrow. I'll see y'all tomorrow at 6. Wait a minute before I say that. Tomorrow's Tuesday. Yes, I'll see y'all tomorrow at 6 for the price action recap. Tomorrow is CPI, so be careful if you said since 2007. I know Keith Sweat been on there for a while. I know he's been on there for a minute. If you tend to trade pre-market, be careful tomorrow because tomorrow is CPI. We got CPI numbers at 8:30. So the algorithm tends to engineer liquidity before CPI is released. And then it tends to use the CPI to manipulate out both sides of the market. CPI is one of them ones that typically both sides get manipulated out. I have seen days when the CPI only takes one side of the market, but the vast majority of the CPI days, it wipes out both sides of the market, right? Both sides of the market get wiped out. So you have to be in tune with what the algorithm is really doing prior to CPI, because it'll wipe out both sides and make you think like, okay, which way does it want to go? Right. So you want to make sure you understand, are we in a buy program? Are we in a sell program? Right. And are we in a market maker buy model? Are we in a market maker sell model? Are we on the right side of the curve? Or are we on the left side of the curve? Right. All of that plays a part in it. And with that, until the next time I decide to get on Al Gore's internet and share my thoughts on this thing they call price action, it's your boy, Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's just big spot if you don't hablo español. Y'all be safe on these straight streets, man. Gone.